All right, perfect. So, yo, what is up for y'all watching this on the YouTube replay? Today is a mixed bag of a day. We got certain stocks going up like crazy, but then we have some other stocks not doing too well. One stock in particular that's leading to a lot of gains in our portfolio. We're up 0.85% on the day, and the SPY is only up by 0.15. Yeah, look at that. The market's just started trending down a little bit. Nvidia went negative, but Google is going crazy today. So Google's result came out that, the DOJ was coming after them for being a monopoly, and there was a high potential that they would have to sell off Google Chrome and or either Android, and they just declared that they didn't have to do that. So that's why Google stock is up 9% today. Here's our total percentage change on every stock. So luckily we are green on every stock in here. Also, here's our year-to-date performance. We're up 14% year-to-date, 19% the past year. We also have a Roth IRA. Ooh, yikes, look at that. So we're down 1% in the Roth IRA today. Only up, we just started this portfolio basically a year ago, but here are all the stocks that we own in here. And yeah, it's kind of a pretty trash Roth IRA, if I'm being honest with you. But here's a portfolio I think you guys will find pretty cool. This is my growthy account with a lot of names you've probably heard of before. Let's see what's up and down the most on the day. So FUTU's up 3, PSIX is up 5. But besides that, it's really a lot of losers. Lots of red in here. We're down 0.5% on the day. But yeah, we have some popular names in here that you've heard of before. Let me just filter by this right here, like Reddit, Disney, SoFi, Robinhood, AMD, let's see, Supermicro, T-Mobile, Progressive, Sprouts Farmers Market. So those are all stocks that I own and love. I'm just holding these on for the long run. Like if you've been watching me, I've been streaming almost for a year now. If you wanted to follow up on, I appreciate that. But I've just been holding those exact same stocks. Like I haven't really been selling out of any. I didn't sell out of any positions really. But yeah, we're green today. Hey, that's what's up. Oh, hey, what up, Mac? No way. What's up, man? Good to see you. Yeah, we're down 0.4% on the day. Here are all the stocks that I own in here. This is my buy and never sell account. Yo, what up, Dylan? Best Buy. Yeah, we can look at Best Buy too. Yo, we're streaming on YouTube and TikTok right now. But yeah. So this is my buy and hold account where once I buy a stock in here, I try not to ever sell it. I try and just hold it for the long run. But you know what? We'll pull up Best Buy and then we can go back to Google, man. Google was and also Apple is up on the Google news as well. But here's Best Buy. This is kind of a boring dividend play. Like, what's the yield on this? So yeah, you get a 5% dividend yield on Best Buy. So if you buy the stock, you're getting a qualified 5% dividend yield, and they're the same prices they were back in 2018. So that's kind of the thing with some of these higher yielding stocks. They're the same prices they were back from before the pandemic. But oh hey, this app is saying there's some technical analysis right here. What is this? There is a megaphone bottom, and it says the rise probability is a 95% chance. So that's interesting about Best Buy. So yeah, as we know, they sell mobile phones, electronics, appliances. But let's go see if this dividend payout ratio is safe. So they made $186 million of net income in the most recent quarter. Let's go see how much exactly the dividend cost. The dividend cost $200 million. So here's the thing. They could not afford the dividend in the most recent quarter. They at least need to make $200 million of net income, and they actually didn't make that this quarter. So that's one thing you do got to be aware of. And the sales just aren't really growing. The sales are up by 1.6%. So Best Buy just seems kind of boring, but seems like a nice dividend play. Hey, what up, eyes? Got nice gains on Google today because of rise. You know what? Yeah, let's go analyze Google right here. So Google is such a great company, man. DOJ said they don't have to sell Chrome or Android, which is pretty cool. Google's legit an ETF in one. They own so many businesses. I'm up 41%. If you go watch my most recent TikTok, I just made a short about this, but I'm not selling a single share of Google. Here's why I think even though Google's at an all-time high today, they're going to continue to keep on climbing up. I'm not selling this at least till 250, or I'll trim it at 250. I definitely wouldn't completely sell out of this company. It's like a Mag 7 stock you'd never want to sell. Here's why. Look at this PE ratio. This is the net income multiple. Google trades at 24 times net income. Historically, they trade at a 27. I feel like they can stretch up to a 27, 28 PE before Google really gets super overvalued, and that'll push that to around 250, $260 a share. And Google prints money, they legit make over $100 billion of after-tax net income a year. I mean, ridiculous, net income numbers. And what is Google doing with all this net income? Well, they legit spend it all on share buybacks. This number right here at the top, they're spending $15 billion of their after-tax net income every quarter solely buying back their own stock. That's why they never go down. But that's also how the net income is up 19, but the net income per share is up by 22.2. That's the power of the share buybacks. You own 3% more of the company. That makes up for this very small yield. You only get a 0.35% dividend yield, but you're getting a 3% share buyback yield, which is basically a 3% non-cash dividend. So anyway, Google's a monster. I think they're going to continue to climb higher. I wouldn't call you crazy if you trim a share here or trim a little of your position, but I definitely wouldn't sell out of my entire position. I think that one's just going to continue to win. Hey, what up, Accelerate? What up, Dylan? Yo, what's up, guys? So Google will appeal anyway. Yeah, Hood bought another share. Adrian, what's up, dude? Yeah, Hood is my actually best performing stock of all time. And I bought this stock at the IPO. I've been holding this stock for legit like 4 years. But yeah, Robinhood, such an innovative broker. I'm up 600%. We bought all our shares legit right after this IPO right here. So that's where I bought all my shares of Robinhood. Here's what I love about them. They deserve to be over $100 a share. But I'm not too. Actually, it seems decent to maybe pick up a little bit. I wouldn't go full-size position at this price still, but they have ridiculous margins and ridiculous growth. So let me pull this up right here. Here's their net cumulative funded accounts, 26.5 million. When the same time last year, it was only 24.2. So they grew it by over 2 million. But this is the most impressive part. The sales were up by 45% after growing 40%, 990 million of revenue. And out of this 990 million of revenue, 390 million of it was after-tax net income. These brokerages have ridiculous margins. You look at IBKR, which is Interactive Brokers, you look at FUTU, they legit have 40, 50% net margins, and look at these growth rates. At this growth rate, what's it going to be this time next year? So Robinhood's just a beast. And I'm also a shareholder, so I might be biased, and I'm also a customer, so I've probably given them a lot of transaction fees throughout the years. And I have my Roth IRA with them. Pretty cool. So all right. Oh, Moses said, since we just looked at, Bull is another. See, Bull, this is another brokerage. They are still not really making any money. Let me see. They lost net income in the most recent quarter, but they just legit IPO'd, so we'll give them the benefit of the doubt here. They're super growthy. Weeble revenue, or the stock's revenue, is up 46% year over year. That's very nice growth, but they did lose net income on that. I also use Weeble, so I've also given them probably a lot of transaction fees and stuff like that, so you're welcome. But I instead choose to buy FUTU and Robinhood stock, but I got to do more research on them. I like that, the growth on them. Okay, what do you think of PanW? What up, Mike? So that's a stock owned by the person we all love, Nancy Pelosi, the absolute genius stock trader. But yeah, one of the stocks she owns is PanW. This is Palo Alto Networks. This is probably my favorite cybersecurity name out there. Probably my second favorite would be CrowdStrike. But yeah, Palo Alto Networks is the largest cybersecurity stock out there, I believe. And I love subscription model companies. And here's what's so cool about Palo Alto Networks. And yo, what up, Snake? How's it going, man? Hello there. But yeah, 55% of all the revenue comes from their subscription model. And this is the annual trend. It's in fiscal year, but you can see it just hits a new record every year, every quarter. So just ridiculous growth in the subscription business is over $1 billion a quarter. And they're also profitable, making a couple $100 million of net income every quarter. The free cash flow is even better, $1 billion of free cash flow this quarter. So they're the most profitable cybersecurity name. CrowdStrike's still struggling, even though I still love CrowdStrike. They're still seeing some lawsuit payouts. A lot of the cybersecurity names have been getting hit. Wow, look at CrowdStrike. They're a good chunk off all-time highs, over $100. Okay, CrowdStrike. Yeah, CRWD. Raphael, what's that? Oh yeah, hey. I'm on a brokerage right here where you buy stocks. If you want to get it, it's in the link tree in my bio. It's that very first link there. Or you can just type it into Google. It's just a brokerage called Moomoo. But link tree in bio, first link is affiliate link. Okay, someone's been saying, look at Wendy's. Wendy's, unfortunately, is losing the fast food war to McDonald's, because this is unfortunate. You guys ready for this? Wendy's is the exact same stock price as they were back in the year 2004. So you bought the stock at 2004, it's the exact same price that it is today. Also, another thing to think about the difference here. So McDonald's, guess their market cap. The whole company of McDonald's is worth, where is it? 226 billion. So the whole company of McDonald's is worth 226 billion. Does anyone have a guess for how big Wendy's is? Kind of get your guess really quick here, but Wendy's, the whole company, is only worth 1.9 billion. They're legit 1/100th the size of McDonald's, which is just kind of crazy. So this company just doesn't have a great franchise model. We can check their financials though. Are they growing the sales? That's what I want to see. Are they growthy? So yeah, the sales are negative year over year. Sales are down 1.72%. They leveraged up a little bit. I mean, it's not the end of the world because they are still making net income every quarter, but legit, all this net income, or like 80% of it, gets eaten to the dividend. So honestly, they need to like cut this 8.8% yield. I would be super careful with Wendy's. My side of the bet, I would rather buy McDonald's stock right now than buy Wendy's stock right now. Not financial advice. I'm definitely not an expert. I started a FUTU position. Rodrigo, I love that company, and I own them as well. They're one of my largest holdings. I have 8 shares of FUTU stock. What's so cool about this company? They're so growthy, by the way. They do a special dividend every year, so that's pretty cool. Now that they're the most profitable they've ever been, I think the next special dividend is going to be even greater. Another crazy part about this company, they're a brokerage, of course, the one we were just on. They have a 48% net margin. These brokerages just have ridiculous net margins, which I love. Can you see how much improve? Okay. He wanted me to look at that stock. Sorry, my Wi-Fi is a little slow right now. I do apologize. So here's FUTU Holdings right here. Let's go over this stock right here. And by the way, what is FUTU? It's legit this app that I'm on right now. I'm on a brokerage called Moomoo, and this is the app that I'm on right now. This is them publicly traded. And let's go analyze them, see if they're safe. Here's what I love. First off, even though the stock's pretty close to an all-time high, they're only trading at 26 times net income. So pretty fair valuation. We can see their total number of users, 27 million. The client assets are at 124 billion, and it's really good to know that they're printing money. This is in USD. They made 330 million of net income this quarter. They're also growing their margins. So check this out. The sales are up by 69% year over year. So sales are up by 69, but then profits, the after-tax net income, is up by 111. So that means they're expanding their net margins, a legit 48% net margin. That's why I love this company. They also are now doing dividends since they have so much leftover cash. They're growing. This is their other income right here. This is like their crypto fees, I believe. Just ridiculous growth, up 174% year over year, nearly a 3x. All their businesses are growing. Brokerage commissions are up 86%. Interest income is up 43%. So that's how brokerages make money. So, I also, interest income, hey, that's, so on this app, I keep my cash in here, earns me 4.10% APY. They're also making a little bit of APY on top of me for having their cash in there anyway. Let's keep going. What do you use to reach? Yeah, hey, again, if you want to get this little brokerage I'm on, I have an affiliate link. It's in the link tree in my bio. It's that very first link there if you want to get this little app I'm on. It's my favorite one for lowest fee brokerage, best free analysis tools, best everything in my opinion. And I have a video where I compare them all. All right, so let's see. What do you think of Rivian? Yo, what up, potato? So unfortunately, Rivian, they are in a pickle right now because they lose a bunch of money. Hey, what up, Ruben? I'm waiting for RZLV earnings. Hey, nice. TSSI, yeah, we'll look at them too. Gemini Space IPO, we'll check them out too. Okay, so here's Rivian. Here's the thing. I just think it's tough to buy about this stock. It's the fact that they burn through money. They lost $1 billion this quarter, $1 billion that quarter, 500 mil, 700 mil. What was the ticker for FUTU? Yo, you got it. It was ticker symbol FUTU there. I'm not sure if you were being facetious. Okay, but this is the bad part about Rivian. They're burning through net income, but the trend's getting a bit better. Another good news, they're kind of backed by Amazon and Porsche. Amazon owns 13% of all the shares. Porsche owns 12%. So they are backed by some big people, which is good. But those net income losses just scare me away as to buy them individually. So my side of the bet, I would just buy Amazon, because Amazon's a largest shareholder, so you're getting some exposure to Rivian through Amazon stock. But yeah, pretty cool. Amazon's huge in robotics. All right. So, Accelerate said TSSI seems oversold. I agree. This is a company I do like. Here's the thing about them. I normally don't really love these kind of companies because if you look in the top right, they're only worth $330 million. So that's an extremely small market cap. Only 300 mil. That is very small. But here's what I like about this company. Out of all the $300 million companies out there, here's one that's making a couple million of net income a quarter. So they're actually profitable. And on top of making net income every quarter, they're ridiculously growthy. The sales are up by 261% year over year. So that, last quarter it was up to nearly 100 million of revenue. So I really like TSSI for those reasons, but there are still some risks here, and I haven't done much research on this company besides looking at their financials. So I would still be careful because the market cap's so tiny. But yeah, okay. But yeah, by the way, if you want to hit the follow button, we go live every day. Sorry, my Wi-Fi is just bugging right now. It's small chance I have to end the stream if this keeps up right here because it's saying the bit rate just tanked on my stream. So this is not good. All right. OYY, please. We'll try it. We'll try it if the Wi-Fi allows it. So I can't find that company actually, unless you're talking about this Singaporean company. You probably are because the stock has done so well, but they're very tiny even today. Still a $1.75 billion company, so that might mean there's still more upside potential. But yeah, do beware. All of this company's revenue comes from Singapore, so do keep so be aware of that. So they're an agency service company in Singapore. Are they making profits? They have 35 million. That's a record for this half. If you include what's probably going to be at the second half of the year, it's going to be a record year for this company. So maybe that's why they're rallying so much. But I'd still be careful with them. Um, okay. Um, Look at which one? Oh yeah, I wanted to look at. Did they IPO yet? Gemini Space Station. Okay. Market cap. They're only looking at a $2 billion market cap. Or do we get any? We do get some financials. Do we? Okay, so they don't have much revenue, and the revenue's not growing. The balance sheet should fix with the IPO funds. I don't know about this one. They lost 300 million already this year. That's 10% of the IPO price. I'd wait till the IPO maybe. I don't know about that one. But I will say a lot of IPOs have done great recently, like CoreWeave, bullish. Like as soon as the IPO, they have like some huge initial rallies. So maybe some people like to um, buy and then sell it instantly. So, okay. LEU stock. Let's do this one. I haven't heard of this one. So, Centrus Energy, a $3.6 billion company. Then I want to go check on how the market's doing. Hopefully, the SPY has recovered a little bit since we last checked it. So, yeah, $3.6 billion company. They're a low enriched uranium company. So, this company, that makes more sense. It's trading like the commodity of uranium. And another way to get exposure to uranium is just ticker symbol URA. So those two stocks kind of move together. But yeah, there's the URA ETF. I wonder if they're on here. Oh yeah, there's LEU. LEU is 4% of this ETF right here. My favorite uranium play of all time is ticker symbol CCO, Cameco. Nuclear reactors are being powered by uranium, and the administration's been super bullish on nuclear reactors. My favorite way to get exposure to nuclear, if you are looking for nuclear plays, ticker symbol CEG, a little bit expensive right now, but yeah, that's today's big winner, man. Google's up 8%. Still, it's fallen a little bit right now, but still can't complain of an 8% day on no earnings, just a judge ruling. Looks like the market is kind of falling into the close, or we still have an hour till the close, but yeah, the S&P struggling to hold on to the gains a little bit. How's the Roth doing? Yep, new intraday low on the Roth IRA. And hey, what up, Mikey? How's it going, man? And in here we are down 0.65. Yo, what's your P&L? Well, here's this portfolio. If you look in the very top left there, that's my open P&L. So since I started this account, I'm only up 15% all time in here. So we've definitely underperformed the market. But some of these other accounts, like I believe I'm up double in this portfolio all time. Yeah, just year to date, we're up 44% in this account. This is our buy and hold portfolio. I wonder if it always, never mind. All right. So anyway, All right. APLD. Let's do APLD. That's a company owned by Nvidia. So Nvidia owns legit a bunch of individual stocks. They've just been buying the dip on CoreWeave, but down here, their third largest holding is an APLD stock. Let's go analyze them actually. So they've actually had a huge partnership with CoreWeave. Um, NVIDIA really orchestrated that. CoreWeave and APLD just went into a huge partnership. That's why they were, rallying these couple days, and they basically reaffirmed that good guidance on earnings. So I'd still be careful with this one because they are burning through quite a bit of money. But in fact, so I'd still be careful with this one, but they are interesting because NVIDIA does own them. Okay, check 3D. Yeah, hey, give me a ticker symbol and I can check it out. I don't know what stock that is, by the way. Sorry. I feel like they might be big since they also have a credit card. Wait, GEMI Space Station? Oh, are they a crypto thing? Sound like a space company, Ruben. Maybe it's, I don't know. So, what up, Kaz? Why if FUTA? What is that? PLTR. So, Palantir is such a great never sell stock. So, Palantir is like everything investors want. They have absolutely no debt at all. So, Palantir is a debt-free company. Let's see how they're doing. So, the government business is growing like crazy. This is the thing, so many police stations are using Palantir's government software, and that business is up 49% year over year. The commercial revenue is up 46% year over year. So both main businesses are growing like crazy. Also, they had their first ever $1 billion revenue quarter. So they made $1 billion of revenue, up 48%. And on that billion, 330 million of it was net income, a new record net margin quarter, growing their margin 63% year over year. Everything about this company is doing fantastic. Like, it's crazy. That's why Palantir deserves all the hype around them. They're also debt free with $6 billion of cash, up from $4 billion the same time last year. I mean, for all these reasons, Palantir is just a winner. Unfortunately, they're a bit overvalued right now. I personally think I wouldn't, I don't love them at this price, but I'd love to own them at a much lower price. Celery said, I'm very interested in Hive at the moment. So unfortunately, I believe this is just a Bitcoin mining company. And unfortunately, I've never seen the Bitcoin. Yeah, look at that. They're kind of close to all-time lows when Bitcoin's at all-time highs. The Bitcoin mining companies never outperform actual Bitcoin. So look at where all the revenue comes from the Bermuda Triangle. So they don't pay any taxes. So that makes more sense. So yeah, digital currency and blockchain sector. So I'm pretty sure they just own a bunch of crypto. And you look at the balance sheet for this. Actually, they have a lot of crypto on hand. The assets are just their Bitcoin value. They have no debt, which is good. So you might want to I think you just trade them. Yeah, they're basically trading right at their Bitcoin value, which might be normal. I don't know, but you just really trade them off their net asset value. Okay. Do you believe in ETFs? Yeah, I love ETFs. My favorite one is ticker symbol VOO and QQQM. If you're just looking for a growth ETF, the NASDAQ 100 is one of the best ones out there. Breaks your money up for you in all the top tech companies like NVIDIA, Microsoft, Apple, Amazon, Broadcom, Meta, Netflix. I'd happily own all those stocks individually. So that's just pretty cool. Can you do SoundHound? What up, Ali? He said SoundHound, or Ali said SoundHound AI. There's one thing you want to watch if you own this stock. They're down 5% on the day, but here's the one great part about SoundHound AI, and that is their subscription business. Legit, 75% of the revenue comes from their subscription revenue, and the growth on this business has been insane. Because just a year ago, it was a nothing burger. $400,000 a quarter, no revenue, but now it's at a new record, up 800% year over year. These year over year growth rates in the middle are really the most impressive part. They're up 800% after growing 800%. So to a new record, 32 million. Subscription revenues all reoccurring. So that's what I really like. They're also beating on expectations of the analyst, which is good. But I still would be careful. They are still losing a bit of money, like 50 mil a quarter. But I do like the growth of the sales. Pretty insane sales growth on SoundHound AI. Hey, what up, John? Good to see you, man. Thanks. So DDD, you know what? I'll check the stock out. This is 3D Systems. Okay, so they're a very small company at all-time lows. They're the same price as they were back in 1999. So you bought the stock back then. Dang, they went all the way up to $91. And so Let's go see what they do. Do they have any sales actually? So the sales are down bad. They're not growing. The sales are down 16% after falling 12, after falling 9, after falling 15. So that is sad, these year-over-year declines. And they're also losing net income every quarter, which isn't good. Did they just sell an asset? Like it says they made 100 million of net income this quarter. That wasn't real. So look at this. This is so weird. If you go to their cash from investing activities, it's positive 100 million. You always want to see this negative because that means they're reinvesting back into the business. They sold off some of their assets. I maybe they had to, but this is not good. I'd be so careful with that company, just from a numbers point of view. Is it better to own individual or ETF? I think it's a good combination of both. Have the S&P 500, not financial advice, of course, but, have the S&P 500 as the backbone of your portfolio. Then go and buy some individual stocks that you love and use, like Amazon, Google, Coca-Cola, Meta. And do your own research on them, of course. So Hyperlink, hey, what's up, dude? He said ASA stock. What's this one? ASA gold and precious metals. So yeah, if you look at gold, it's at an all-time high today. So if you own some gold chains, gold jewelry, maybe go hit up the pawn shop because it's doing great right now. Oh, this is an ETF right here. Okay, so it owns a bunch of gold companies. Cool. So that's an ETF, and yeah, pretty much the price of gold's at an all-time high. Oh, what up, Dylan? You said PayPal. Yo, PayPal's a cool company. So I love PayPal for the share buybacks. Unfortunately, this stock hasn't done too well. They're the same price as they were back in 2017. But here's why I think PayPal might actually be worth looking into. And here's also one of the reasons why the PE is so low. Like they're trading at 14 times net income. That's like a commodity multiple. Like they're expected to not really create or lose you any money. And that's because the sales are very slow growing. They're single digit growth. The sales are only up by 5%. But the good news is that they make a bunch of money, just over $1 billion of net income every quarter. And of course, what is PayPal doing with $1 billion of net income every quarter? They're buying back their own shares aggressively at this price. Like I've never seen this. Over $1 billion of net income a quarter they're spending on their share buybacks. Here's what that does to you. You ready? You own 8% more of the company than you did a year ago. That's how the net income is up 11, but the net income per share is up by 19. That's because there's 8% less shares that exist, and so you own more. You get more of the net income than you did before because you have more ownership. It's pretty cool, the power of stock buybacks, and I think they're doing the right thing with that money here. So I wouldn't have them as like a huge meaningful position, but I would think they're worth looking into. Not financial advice there. How's your portfolio today? Well, today it's like a mixed bag. Google is really. I think we're still up we're up 1% in this portfolio. Google is up 8.3%. Google's just been a saving grace for us today. The S&P 500 is only up by 0.1. So Apple's doing really nice as well. Congrats if you're in Google or Apple. So pretty cool. Hey, what up? He said SIG. What up, my foot? He said Signet Jewelers. Okay, so this might be another gold stock. So they're the same prices they were back in 2014. Let's go see how they're doing. You get a 1.3% yield. So they're in, so bridal, fashion, services, watches. How are their watches doing? Up 9%. Bridal's up 1%. Fashions, so they're not growing. That's the unfortunate part. So if we go to total sales or just revenue, which is total sales right here, it's only up by 3% year over year. So not great growth, single digit growth, and they're struggling with net income positivity. They actually lost net income this quarter. At least if you average out the 4 quarters, they are making, 20 to 30 mil a quarter. Or was that real? Yeah, okay, so all right, but it's tough. They're not growing. Nothing's really blowing me away there, to be honest with you. What's happening now? Why is stock down? I'm not too sure. Probably just momentum today. The market did hit an all-time high basically 2-3 days ago. So I'm not too worried. If anything, I'm ready to buy the dip. The only people that are upset or that you should only be upset about the stock market going down is if you plan to never buy stocks again. Like your future, you always want to get in at the best prices. Okay, but it never feels good to see your stocks go down. Okay, Carnival Cruise Line. Oh, and then we can look at PMT, GAP. Yeah, remind me to look at those. We'll look at those next. So here's Carnival Cruise Line. This is that cruise company. I haven't been on one of their cruises, I think, since before the pandemic. Unfortunately, I haven't been on any cruise since the pandemic. But the cruise lines are coming back. If we look at Royal Caribbean stock, they're printing money, and finally now Carnival Cruise Line is making money. So if you average out these 4 quarters here, they're making a couple hundred million of net income every quarter, easily over 500 million of net income a quarter now. But in a recession, these kind of companies do terrible. Like look at 2021. A year after the pandemic, they're still losing basically 2 billion of net income every quarter they were losing. So they're very recession prone, but whenever the economy is doing good, they print money. Same way, Royal Caribbean probably is a better play in my opinion. They have less debt and stuff, but I still I don't love the airlines and the cruise lines. They don't really outperform in the long run. Like they're still down bad from the pandemic. But yeah, let's look at PMT. You have 1K cash plus. Yeah, I got 1K cash. I'm ready to buy the dip. There's not many great deals right now, so I'm waiting. Wait, let me know which one you're talking about. Patriot Battery or PennyMac Mortgage? Michael, he said PMT. I'm not sure which one you're talking about, and I'll check it out for you. Ruben said XRP. Yo, we don't really look at crypto on here, but let's see how XRP is doing for you. But what's cool about crypto is they're unlike stocks. They don't have earnings reports. Like XRP can't miss on net income and miss on net margin. So that's what's a cool feature about crypto 24/7. But I like companies that pay you dividends. That one's done great. Like if you bought them before, a year or two ago, you're up like 3-4x. That's crazy. Okay, let's see. Olaf said NVNI stock. Let's do it. So I haven't heard it. Okay, we don't really cover these kind of stocks in the channel here. So if you look in the top right, the market cap, they're only worth $53 million. And they're at all-time lows. They're not an American company. They're a Brazilian company, so you have to pay ADR fees. I mean, the story keeps getting worse here, and they're burning through net income. They have more liabilities than assets, and the assets trend down every quarter. The sales are down 10% year over. I mean, the story keeps getting better for this company. So, yeah, I'd be so careful with that one. From a financial point of view. Ooh, okay. Oh, PMT. He said it was PennyMac. Okay, so here's PennyMac Mortgage. Yo, I wonder how this one's doing. Rocket Mortgage, Mr. Cooper. Some of the other mortgage stocks are doing pretty decent. So yeah, this one's been flat for a while. That makes sense just because of the high interest rate environment right now. These companies are begging for low interest. Yeah, interest rate sensitive loans or strategies, whatever. These companies basically can't wait for an interest rate cut. That'll be a huge, huge, huge tailwind. And they are making net income every quarter. So luckily they are making net income every quarter, but the trend doesn't look too great. And I guess I don't love how interest rate sensitive they are, and the stock hasn't done too well when the market's been booming, but maybe in an lower interest rate environment, that one will do better. So someone said Gap stock. I think that's the that clothing mall company. So these, again, if you look at Kohl's, Macy's, what's that one? Bed Bath Beyond, I think. These stocks just don't move. Like this stock is the same price as they were back in 1998. Same with Under Armour. Some of these other names too. It's tough. American Eagle, Abercrombie and Fitch. Actually, that one might be doing better, but they're the same prices they were back in 1998. What's the yield? So you get a 2.8% dividend yield, and it looks safe. That's a 27% payout ratio, so that's good news. Let's check out. Yeah, so the sales are only up by 0.13%, so they're not very growthy. Sales are up by 0.1. Doesn't really beat inflation, but good news. They do have a consistent stream of net income, better than some of the other names I've seen. They're making, 200 million of net income every quarter. I guess they pay, 25% of that out in dividends. Are they doing share buybacks? They are. They bought back exactly 1% of the company than they did a year ago. So it's not like I don't see them going bankrupt, but it just don't really see them outperforming the market. But it's not the end of the world. They're still making good profits, but slow growth there. Hey, what up, Schlink? Ooh, AMD stock. What up, G? Yeah, dude, I love AMD. So I do own this company, by the way. Full disclosure, I might be biased. How are they? Are we down on them today? So yeah, we're down $13 thanks to AMD today. I do own like 13 or 12 shares of this company, but let me show you what I love about this stock right here. I might be biased when I cover them. Uh, all right, so yeah, they have this huge GPU market share. Obviously, a 17% PC GPU market share, pretty insane. That's on their client and gaming business, which grew 69% year over year. So it's nice seeing the client and gaming business growing. Also, the data center business is up by 15% year over year. Data centers need GPUs, and a lot of data centers or AMD makes GPUs. So they can just supply it themselves. So it's pretty smart for them to get into that business, just like NVIDIA, which is 80% of NVIDIA's business is data centers. The free cash flow numbers exploded up to 1.7 billion, a new record. The net income was a record 900 mil. They have a fortress of a balance sheet, no net debt on AMD. I think they're a bit expensive here at this price. I'd wait for under 150, but I do like AMD. I might be biased though. Thoughts on CRM with the earnings call? Oh, is Salesforce report earnings today? That's wait, September 3rd. Yeah, so Salesforce is a huge software company. They own Slack. It's such a great asset for them to own. I think yeah. So here's the bad part. They're the same prices they were back in the year 2020. That's because the growth is kind of slowed down. I love how diversified that they are. Services, sales, platform, integration, analytics, marketing, commerce. But if we go to the actual net income, the net income only increased by 0.5% year over year. And the sales were up by 7.6. So what does that mean? It means actually their margins fell. When the net income doesn't grow as much as the total revenue, that means the margins collapse a bit. But it's not the end of the way. They basically from now on for the rest of the time they're going to grow probably seven, high mid single digits without acquisitions. I do really like Salesforce still, and I'm very much going to pay attention to their earnings. Seems like they still print money. The free cash flow number. Also, they made 6.3 billion of free cash flow this quarter. It only grew by 3.5%, but that's still a huge number. That's after growing 43%. So I do like Salesforce. You also get a yield here of 0.63% dividend yield. But a lot of the software names, like you look at Adobe, they've been struggling. Workhorse, or is it Workday? What brokers do you? Oh yeah, hey John, this is my favorite brokerage right here. If you want to get this app that I'm on, it's in the link tree in my bio. That very first link there. It's my favorite app for analysis, lowest fee brokerage. And I keep my cash in here in the middle of my screen too. I earn interest on it instead of I would. You see, with Robinhood, they're trying to make you pay $5 a month to get a 4% APY. Well, this company you don't have to pay $5 a month and you get a 4.10%. So I'll keep it here. What's the difference between S&P 500 and S&P 500 mini? Mikey, that's the futures, I believe. Is that's what you're talking about? So can you check Catalyst, or is ADR fees a lot? It's usually not that much. AMPX. So let's do it. Do you know about Gemini? Yeah, hey dude, try not to spam there. Hold on. There we go. So this is AMPX. This is a very small company. They're only worth $900 million. Yeah, what up, Bobby? We'll look at Iris Energy after this too. Bet. I love that company. I like them more than it's like my better play on CoreWeave. And we can look at Oscar Health too. Yo, remind me to look at Oscar Health. My bad. Sorry if I don't get to all the stocks here. I try and go quick. But this is a $900 million company. They sell batteries, so it says battery segment. The sales are expected to double, so check that out. 2024 Q4, 10 mil of revenue. The analysts are expecting 20 mil, and they usually beat by a good 10-20%. So the growth is probably what investors are really happy about. It's easy to grow small numbers, but the losses are narrowing, so they're barely losing any net income now, which is great. Deleveraging their balance sheets. So actually, everything here is headed in the right direction. It might be worth 900 mil. That they're really interesting if they can actually keep up that growth rate. They'll probably be net income positive in a couple years. Probably cost per share. Good for selling calls. Well, I like bonds for selling calls on TLT. So let's look at IREN here. This is Iris Energy. This company, they're in data centers and they also like mine some Bitcoin. So I believe they have incredible growth. Like whenever you're looking at a company, you like if you're just planning on buying, holding them for the long run, I want to see them grow like crazy. And this is one that I love. It's like they're growing like crazy. After the sales grew 105% from the previous year, they're up another 230%. The sales growth is crazy. And out of this 190 million of revenue, 95 million of it was after-tax net income. So they're profitable on those numbers, growing their balance sheet every quarter. I just really like everything about IREN. So, but they're probably a bit overvalued at the moment with how nice their earnings have been. But I like them more than CoreWeave just because CoreWeave burns their money. But CoreWeave is also really or super growthy with their sales. Um, what about JP Morgan and Oscar? Oh, yeah, wait, we'll look at Oscar Health, and we got to look at JP Morgan. Yo, JP Morgan's a great bank. I wonder if there's any news around this company. Nope. Okay, so Oscar Health is still struggling with net income positivity. That's why I think they've been flat for a couple years. But the thing with Oscar Health is they are so growthy. Check this out. I mean, if we look at their annual sales, the entire year of 2020, the sales were 580 million. Now it's 9.2 billion for the entire year. That's an incredible growth rate. I don't know what other company just like 10x's their sales like that. It's literally 2.9 billion in revenue just this quarter, up 30% year over year after growing 45%, after growing 44%. So they're just super growthy, but they're still struggling getting consistently net income positive. Plus they have the headwinds around the regulation for the Medicare, Medicaid companies. UNH is seeing this as well, but yeah. Let's look at JPM right here. So JP Morgan, this is a fantastic bank stock. So they are at an all-time high. And even if you buy this stock now at an all-time high, I wouldn't call you too crazy because you still get a near 2% dividend, a 1.8% dividend yield. And, commercial and investment bank, consumer community bank, asset and wealth management. But this is the insane part that JP Morgan legit makes 14 billion of after-tax net income every 3 months. So nearly every month they're making 5 billion of after-tax net income, which is just ridiculous to think about. They got 4.5 trillion of assets under management. Just ridiculous. So pretty crazy. And you get the nice yield. Yeah, CRM earnings will be very interesting. What's moving Tesla today? I'm not sure actually. I'm not sure. Let's see how the market's doing. We're up 0.9% on the day, mainly thanks to Google. Anyone here on Google? I mean, they've done amazing. And also Apple stock. Apple gets the money from Google still, so that's why Apple's up on the Google news. But yeah, let me check out our Weeble portfolio really quickly. Anything green? Yeah, FUTU's green on the day. PSIX is green. Dang, Reddit went negative. Oh no, they're barely green. So dude, Reddit was up by like 8% this morning. The stock was up to $200 and basically $40. Now it's $220. We're just down to $218. Reddit is such a great company though. Okay, WIT stock. And what up, Joseph? Can you go over Powell and would you buy more? Yeah, we'll look at Powell after this too. So here's WI Pro. Actually a really big company, a $29 billion market cap. So pretty big company. Oh, but look, they're not an American company, so we got to convert their revenue to USD. Looks like they're in India, and only 3% of the revenue comes from India. That's really interesting, but they're headquartered there. They're making a lot of money. What's the sales growth? So the sales are actually down year over year, down by 2%. But the net income is up by 7%. So they're actually growing their net margins, even though the sales are falling, which is good news. They're making 400 million of net income a quarter. That's great. 2.5% dividend yield. Yeah, so here's another bank. Or wait, no, information technology. So yeah, that business is slowly like declining single digits. So we want to kind of see the growth come back, to be honest with you. That might be why the stock has been struggling for a while, just because they haven't been too growthy. But they are making a bunch of net income. Thank you, brother. Oscar been paying me. Oh, hey, nice, Schlink. So what happened to Zscaler? Oh, wait, actually, I want to go over Powell. What up, Monkey D. Luffy? So, and what up, Dat One Dude? We'll look at ZS2. So Can you look at Powell? So Powell Industries, this company I bought legit well over a year ago. I bought all my shares this day and I haven't done a single thing with them since. I haven't taken a single share of profit. I haven't, trimmed my position. I've just held on to all them. Would I buy them today? Potentially, probably under 250, but as a small position, not a full size position. But check this out. This app is saying that there is a bullish continuation triangle and the rise probability is an 88% chance. But here's why I think this company is pretty reasonably valued. If we look at their net income multiple right here, they're trading at 17 times net income. And if we compare that to the industry average, it's a 34. One reason I think the PE is a little low is just because this one also has seen some slowing sales growth. After the revenue grew 49%, after going 42, it had a bit of a slowdown. It actually fell by 0.6, but the net income actually grew by 4%. So they have pricing power. They're growing their margins. They're making near 40. They're making easily 45 million of net income every quarter. And guess how much the dividend cost? The dividend legit cost nothing, only 3 million of net income a quarter. So very small dividend cost, and the yield's pretty nice. A 0.5% dividend, 8% payout ratio, and they're debt free. So this company has no debt at all and $433 million of cash. So close to 20%, or let's see. Yeah, over 20% of their market cap is just their No, a little under 20%. A little under 20% of their market cap is cash on hand. So their X cash PE multiple is like a 15. So I'd nibble on that position here. What's the difference between Google? It's just the voting rights. I own GOOG. ABAT, what's this one? This is American Battery Technology. What is this pattern here? It's saying there's a bearish symmetrical triangle, whatever that is. So it's a very small company. They're only worth $240 million. Do they have sales? 900,000 this quarter. I mean, under a million isn't good. They're losing 10 million a quarter. So that's the tough thing. They've lost 50 million of net income in the past year. That's really significant when you lose 50 million and the whole company is worth 240 million. So that I can see why the stock has done basically so bad. But looks like there's some sort of momentum here. Maybe there's some sort of news I'm missing here, but financially though, doesn't look too great. Be careful. Is that a stock? JIPI. Yeah, Michael, I can't find that one. Let me know if you're talking about a different stock. I cannot find JIPI, unfortunately. Thoughts on Supermicro? What do you think about the fiscal note? It's ticker symbol NOTE. Wait, what is NOTE? Fiscal Note Holdings. Yeah. Okay, so the stock is at an all-time low today. They're only worth 67 million. Let's go analyze them and see if we can figure out why they're at an all-time low. So, yeah, they lost 14 mil this quarter. That's legit. Think about this logically. You're buying a company worth 60 million that lost 13 mil this quarter, 5 mil last quarter, 13 mil the previous quarter, all for a business that's not growing. Actually, it's in decline. The business sales were down 21%. That's the lifeblood of the company. So I don't know if I'd buy that one at all-time lows. They might just continue to go lower. Mr. Shelby, yeah, I'm on a brokerage right here where you buy stocks. If you want to get this app I'm on, it's in the link tree in my bio. Very first link there. My favorite app it's a brokerage. Super microcomputer. Let's do this one. So the thing with Super Micro is, here's why I'd wait to buy this stock. I have a scary feeling they're going to go probably 5% lower than where they are today. Yo, Shamshad, thanks so much for the chili pepper, the rose. I really appreciate that. Yeah, we'll look at that stock after this. Don't worry. Thanks again for the rose. So here's the thing about Super Micro. I like this one, and I do own them, by the way. I do own them. I do have exposure. We're down 2% on them on the day. We're still up 52% on them. But I wouldn't buy them yet because the margins have unexpectedly collapsed. Or they expected a margin collapse, but not to this extent. So kind of think about this again. The sales are up by 7. The sales are up by 7, but the profits are down by 34. So again, that means the margins have collapsed. They only have a 3.4% net margin. They just sell a commodity, and the margin's down by 40% year over year. So that scares me a bit, and that's why I'm not adding to my position yet. I think I'll wait till they go 5% lower. Does Maine pay supplemental pay? Yes, or I think he means special dividends. So I do own here. So here's a cool dividend stock. If anyone's looking for a higher yielding play, dang, look at that. We're at a new intraday low in here. Hit the like on the stream for me if you want to help me out. But this is one of the few companies that actually pay monthly dividends, and I do own 7 shares of this company. Full disclosure. So what's really cool about this stock is they pay monthly, and sometimes they make so much money that they pay twice in 1 month, like they did last month or 2 months ago, actually. In between these two 25-cent dividends, you got an extra 30 cents. They did another one right here as well. They did another 30-cent extra special dividend for the shareholder. So you get a 4.7% dividend yield, paid monthly. They're a BDC, so they actually have to, by law, pay out 90% of their taxable income in the form of a dividend to avoid taxes. So that's why that 5% dividend seems normally high, but it's actually sustainable. Also, they pay non-qualified dividends. So that's why I own them in my Roth IRA. If you own Main Street Capital and taxable account, you'll pay short-term capital gains and not long-term capital gains like a normal stock. But let's look at PGY. Let's do it. Thanks again for the rose there. So this is Pagaya Technologies. Or maybe that's how you pronounce it. I've never heard of this stock before, but congrats if you own them because they've been doing great these past couple of weeks here. Let's go look at their most recent earnings report because it was great according to the stock reaction. So they beat on revenue, they missed on net income, and met on EBIT. So there must have been some good guidance or something, but the sales are up 31% year over year, and they made net income on this. So that's a huge win from what they just did the previous year. They were burning through net income, 200 mil, 70 mil, but now they're actually making net income the past 2 quarters. And seems like the analyst, great news. Analysts are expecting them to continue to make this net income, stay net income positive, basically for the rest of the time for the next 2 quarters. So, and sales are expected to grow as well. So that might be why investors are optimistic around that company. So Hafiz said CRMD. This is my newest stock purchase, and I'm actually going to make a TikTok about this soon and probably a whole YouTube video because I really need to get the word out about how great this company is. They're down 5% on the day, and we are down. Actually, hold up. Do I have $13 of cash? I do. We're buying a share right now. Okay. Actually, if it'll let me, it might not let me buy a share because I'm live. So $13.88. We'll buy a share. My Wi-Fi allows it. So we'll buy 1 share at $13.89. Swipe up. Okay, we're going to buy a share of CRMD. Hey, it filled. Okay, so we got 1 share of CRMD. So here's what I love about this company. Again, not financial advice. If you do choose to buy this company, you cannot make it a meaningful size position. Make it a very, very small position. What was the ticker for the last one? I don't remember. If you miss anything, I'm also streaming. PGY stock. I'm also streaming on YouTube, by the way. Hey, that's the best way to support me. Watch the stream from YouTube. I'm also streaming on there. My YouTube channel is called Nathan Roberts. Also in the link tree in my bio. Sometimes I talk too fast, and a lot of people like to replay it. And the stream's there forever. So anyway, here's CRMD. Here's why I think this is going to be a monster performer in the long run. Look at this market cap in the top right. This is a $1 billion company. So the whole company's only worth $1 billion. So this will be easy math. They legit have no debt at all and $190 million of cash. So 19% of this company's market cap is just their cash on hand. So you can basically, when we do this multiple, we can do an X cash multiple. We take off 20% from the PE. But this is the best part about CRMD is their margins. They made $39 million of revenue this quarter. And out of that $39 million of revenue, $19 million of it was net income. They legit have Reddit type margins, 95% gross margins, 50% net margins. I don't believe it. And the analysts are expecting them to continue this revenue growth. They expect to go to 39 million, which was a record this quarter, to 96 million in 2 quarters. And they're expecting them to keep up the net income positivity. That's what's crazy. The net income's expected to legit 3x to 63 cents a share. That'll be 60 million of net income. So they're going to be doing. So think about this. They have $200 million of cash. They're going to be doing $200 million of annual after-tax net income a year, and the whole company's only worth $1 billion. That's why I'm about to make it, not financial advice. And again, as much as I love this stock, I wouldn't make them more than a very small position, a couple $100. But that's a healthcare company, by the way. But I'm about to make a video. I think this stock is legit going to be a 3x. I mean, they're already up 122% the past year, but I really like this one. I am down 3% on my position, and I only have 190 bucks of it, but I really like that name. So anyway, not financial advice. Let's keep going here. Sorry, I went on a little too long about that one, but I really like that stock. What up, Ed Music, German? What's up, guys? Hope y'all are having a great Wednesday. What up, Ben? So can we look at CRNX? Yeah, we'll look at CRNX. And some of these other, and JEPI. Oh, my bad. Yo, I forgot to look at JEPI. Remind me to look at JEPI. I want to look at that after this. That's a nice covered call ETF. They don't really outperform the market in the long run. But here is CRNX. So here's a company worth $3 billion. So we just looked at that last company worth $1 billion. So this is 3x the size of the last company. Let's see if it's better. So here's the thing. Remember the last company worth $1 billion? Here's a company that has no sales, $1 million of sales this quarter, legit loses $100 million of net income a quarter. That's pretty devastating. $100 million loss, $100 million, $80 million. The losses are worsening as well. And they're losing $100 million all for a business that just did $1 million in sales. Luckily, they can't afford these net income losses because they still have $1.2 billion of cash and no debt. So they have an absolute cash pile. But I want to see the sales increase on there. Maybe they're still waiting for FDA approval or something. All right. Oh yeah. So let's look at JEPI. Let's do it. So thanks, Ben. So yeah, this is the JEPI ETF. You basically buy this to maximize your dividend income. If we look at the yield on this ETF, it's a 9.18. Do notice you can kind of see how the annual dividend somewhat trends down. With these covered call ETFs, do expect your income to probably go down by single digits every year. But out of all the covered call ETFs, JEPI is one of the better run ones. And you basically buy it to maximize your dividend income. As you can see, the market's at all-time highs. This one is the same price that it was. JEPI, if we look at them on the weekly, JEPI is the exact same stock price that it was back in 2021. So these don't really outperform the actual market, the underlying asset, but you get the nice, you get exposure and the monthly income. Well, you should expect to underperform, but no, I don't think any investor expects JEPI to outperform the market. But it's a nice yield. Okay. Why is CRMD so much? I'm not sure, man. The whole market is. So, they're also a $1 billion company. Look at us in our Roth. We're down 1.63%. Again, speaking of CRMD, I'll say this one more time. If you are like, hey, I agree. I think the financials look good here. You can't make this a meaningful position, man. And there's so many also great companies like that, like SoFi, Robinhood, some of these other companies I own, Reddit, PSIX, these all have great financials. I can't make them meaningful positions. They're only a couple $100. As much as I love them, I can't trust them that much to really put meaningful money in them. So I put, $200 in CRMD, and if it 2X's, I'll let it grow to a meaningful size position. Okay, let's see. There's a lot of stocks at URI. Were you able to ride the AIHS train? What is that? ENVX. Let's try that one. ENVX. Where would you put meaningful money into? Well, I would eventually put meaningful money into these kind of stocks, but not all these valuations I'm happy with right now. But this is, stocks that I'm basically buying and never selling. These are all my favorite dividend growth portfolios. Like I trust these forever. Like McDonald's. I put money in McDonald's right now. I wouldn't buy Google. I still think Google's going to $250 plus. I definitely wouldn't sell Google here. I'd maybe trim them, but I definitely wouldn't sell out of Google. But these companies, Meta, Google, United Rentals, McDonald's, Coca-Cola Consolidated, Amazon, Comfort Systems. Again, not always at these valuations, but yeah, I would, some companies I would at this valuation, like Progressive, Sprouts Farmers Market, some other companies. But here's ENVX. What is Cattle? Yeah, Ruben, can you give me a ticker symbol? I'll check that one out. But here's this is ENVX. They're only worth $1.8 billion. Look at how they zigzag up and down. That's kind of funny. So they IPO'd in 2021 and they're down bad. So what do they sell though? The sales are $7 million, and out of that, they lost $50 million. Yikes. So, what was the market cap again? So that's probably why the stock's at an all-time low. It's just how much money they lose. I mean, 40 mil. Actually, it's legit 40 mil a quarter. but at least the sales are somewhat growing, but they're only a couple million. I would be careful with that one. Um, What's CEG? Oh, CEG, yo, that is the number one nuclear reactor company in the world. So if you're looking for exposure to nuclear reactors, CEG is the number one pure play to do that. And I'm up 48% on them. It's tough to buy this one over $300. I wouldn't put meaningful money in this one over 300. But this is a great one to just buy and never sell. I just great company. I've made a lot of YouTube videos about them if you want to check it out. I've gone over their investor presentation. They're such a great company. CPRX. Oh, you're talking about them. Yo, I do own this company, by the way. Here's another pharmaceutical stock that I own. And here, I'll show you. I'm actually down on them. Yeah, so right here, I am down 11% on my shares of CPRX. This is another one, kind of like CRMD. I love the financials of CPRX, but as much as I love them, I don't really want them as more than like a couple $100 position. So here's why I love this one in particular. This is actually, let me go to the market cap first. This is another crazy part. The whole company is worth 2.4 billion. So the whole entire company is worth 2.4 billion. It's a company with no debt whatsoever, so that takes a lot of risk off the table. They have no bills to pay, debt-free, and 650 million of cash. So legit, 30% of their entire market cap is just their cash on hand. So we're valuing the rest of the business here, and you're buying a business that's growing double digits. Sales are up 20% year over year. That's printing net income, over 200 million of net income a year for a $2 billion ex-cash PE company. Or more than that, they're a $1.8 billion ex-cash market cap. So I love this one because they print 50 mil a quarter and they have these different prescriptions here like Firdapse. This one's up 9% year over year. So this one's seeing some slowing growth. But if we look at this one right here, Agim whatever, they literally just created this one in 2024 Q1. It was $1 million of sales. And it has just hit a new record every quarter since then. Now it's 30 million this quarter. So we're seeing the growth that'll come from there. It's now 18% of the business. It used to be zero. So it's cool seeing that growth come in. But yeah, and they constantly beat like crazy on the analyst expectations. So CPRX is cool. I like them because they're debt free, lots of cash. Their cash is earning interest as well, but I wouldn't put a meaningful amount. So this is my first year investing. So tax season hits, some stocks gains. So here's the thing, tax season comes around for me. I'll be really quick about this. I tried to make a TikTok about this, and I uploaded it twice and worded it different. TikTok took it down both times, so it must be some valuable information. And I really don't think I'm wrong about this. I always doing research of what I'm trying to say here. But if you make under $55,000, which is me, I make minimum wage. I make under 50K a year by far. You actually pay 0% for long-term capital gains. So for example, if I go to sell Meta right here, I think I can sell in lots. It'll show me. Sell in lots. So yeah, it should show long. So yeah, see how it says S next to these and L next to some of these? That means it's long-term capital gain. So if I go and sell this Meta share right here for 100% gain, it's completely tax-free because it's long-term capital gains. Because if you make under 50,000, long-term capital gains is taxed at 0%. That's the same for dividends as well. So I'm about to receive a $26 dividend from McDonald's. Well, McDonald's pays a qualified dividend, and that's taxed at long-term capital gains. So even though this is in my taxable account, that $26 I receive is tax-free even in my taxable account. And let's say hypothetically I sold all my McDonald's right now. I sold all my McDonald's for 14% gain. All that money would be tax-free when I sell it because, again, it's long-term capital gains if you've been holding it for over a year. So that's kind of the tax code is really in favor of the low income, or it's just in favor for people to invest money. So yeah, McDonald's is one of my favorite stocks of all time. McDonald's is really a real estate royalty company. It's one of the most recession resilient stocks out there. Their sales historically go up in a recession. It was actually the second best performer in the stock market during 2008. What other stock didn't fall? If you go spend $100 at any McDonald's, $4 of it goes back to the parent company as a royalty. Also, McDonald's just released like a pumpkin spice latte. I just tried it today. It was delicious, actually. Not as good as the Starbucks one, but they're bringing back the value. Okay, let's keep going here. Sorry, I didn't mean to rant there. How do you think they can go? I forgot what stock I was talking about there, but I love CPRX. Okay, UPS. UPS might be a dividend trap. So Here's how you can tell for yourself if a company has an unsustainable dividend. So whenever you look at a company like this, you're like, wow, a 7.7% dividend, uh, if you invest in the S&P 500, you're really supposed to get 7 to 8% yearly returns average. So you're going to get the entire S&P 500 average yearly returns just in a qualified dividend. Let's go see if it's sustainable, because the stock price is kind of telling us that it's not sustainable. But check out the net income. Also for UPS, their average daily parcel volume did fall by, well over 1 million, which was like 5% year over year. So here's the thing. They made 1.28 billion of net income this quarter, 1.2 billion last quarter. But remember this, they made 1.28 billion of net income just this quarter. Well, the dividend cost exactly 1.35 billion. You find this number in the cash flow statement. So that's the thing. They couldn't afford the dividend this quarter, and they couldn't afford the dividend last quarter. So that's the tough part. And the business isn't growing either. The sales are down 2.8%. So I think UPS needs a healthy dividend cut. Still, they're making a bunch of net income. Like, yeah, they made 1.28 billion in net income, but legit, they didn't retain any of it. All of this net income, over 100% of it, got paid out to dividends. So they had no leftover money to reinvest in the business or do anything with. So they're in a tough spot with their dividend right now. And I think unless the net income starts to recover quick, they're in a tough spot. And honestly, on a total return basis, what do I think will do better for the rest of the time, Amazon or UPS? I'll probably put my money on Amazon, and not financial advice, because it might be biased. I do own Amazon, but yeah, they're kind of coming for their lunch. They're not growing anymore. And they have no leftover money. Someone said, how about SMCI? Yeah, so we just covered SMCI. I'll cover them again. I saw multiple people ask about that. Let's check it out. So the thing with Supermicro is, and I do own this one, by the way, I am up 51%, and I think they're going lower. I actually bought them during their accounting fraud issues. Yeah, way back here. That's where I bought Supermicro Computer. They didn't report earnings for this whole entire gap. There was like an 8-month period where they didn't report earnings. It was really weird. But Supermicro Computer, here's the one tough part. And what up, Jeff Matt? Good to see you, man. Here's the tough part about Supermicro. The sales grew. The sales grew by 7.5, but the net income fell by 34. The margins collapsed. The net margin was only at 3.39, down 40% year over year. That's why I have a scary suspicion that this is going to $35. Hopefully not down to 30, but I'm waiting to buy. I would hold off to buy Supermicro. I could be wrong here. It kind of does look like a decent time to maybe nibble if you're going to buy now, make it as a quarter size position and only buy once you're down 10% or whatever. But yeah. Oh yeah, that's not me. Yeah, watch out for people impersonating me. I'll never DM you, follow you. Yeah, I sell nothing. I have no course book, Discord, WhatsApp, Telegram. I'll never follow you, DM you, none of that. No. Only thing I do have is a YouTube channel. Best way to support me, hey, subscribe to my YouTube channel. It's called Nathan Robert. So NYT, what is NYT? Oh, New York Times. Yo, I forgot they were publicly traded. They're getting into all the subscriptions. Like, we actually have a New York Times wine subscription. So let's see how they're doing, though. They have a 1% dividend yield. Okay, not bad. They're at an all-time high, which is actually pretty impressive. New York Times Group, that business is up. It's growing single digits, but it consistently grows single digits. That's really good. What about this business, The Athletic? Wow, look at this business growing. That's up 33% year over year after growing 33, after growing 55. So this business is going to become a bigger and bigger portion of their business. I like how that's growing. And they're making a bunch of net income, close to 100 million of after-tax net income a quarter. Sales are up by 9, but profits are up by 26. So they're expanding their net margins, double-digit margins. So everything's headed in the right direction here. I can see why NYT has done so well. Another stock that's like kind of surprised, FOX stock, Fox, has done incredible. They're at an all-time high as well. Wait, is that Fox A or B? I think they're two. Oh, well. Yo, what up? Cherokee said FEAT stock. That'll allow me to pick 3 stocks in a very bad market daily profit. Hey, nice, Sherman. And hey, what's up, Hardy123? Hope y'all are having a good Wednesday. What about Arco? It's the same as McDonald's. So we can check out Arco after this. That's a group of McDonald's franchise in South America. I know what you're talking about, Arco. So this is an ETF. Okay, so we can just look at their top holdings. So it's an ETF that holds a bunch of covered call ETFs. So I don't love that. So you should get a high yield here. Yeah, 34% dividend yield. So yeah, basically this ETF owns ETFs that sell calls on Netflix, Carvana, Robinhood, Bitcoin, Coinbase. So yeah, I don't love the covered call ETFs, but you're buying that to maximize your dividend income. So this is ARCO. This is actually a group of McDonald's franchises in South America. Let me actually see where their revenue comes from again. I might be wrong. Oh yeah, so look, Brazil is 40% of the revenue, Mexico's 10, other countries 37, Argentina is 14%. I didn't know there were McDonald's over there. Anyway, they're making what are the sales doing? So the sales are up by 2.8% year over year. They did make net income on this. You get a nice yield. What's the yield here? A 3.5% dividend yield, a 33% payout ratio. To be honest with you, I would rather just own McDonald's because if you didn't know or how the McDonald's royalty works, this company still pays the 4 to 5% McDonald's royalty back to the company. So I expect this company to have low margins. Let's see. Yeah. McDonald's isn't a restaurant company. Not this stock. I'm talking about the McDonald's parent company. They have 40-50% margins at the main company because it's all royalty streams and rent. Okay, so Celsius Holdings. Yo, Celsius just got a huge stake from Pepsi. So you know what? So Celsius, this is really cool. They're doing a bunch of acquisitions. So Celsius just acquired Alani. If anyone's heard of Alani before, it's like a energy drink, protein shake company. They are in exchange for that, Alani owns 9% of the company. But yeah, Celsius now owns Alani. That's what led to a lot of their growth. That's how the sales grew 83% year over year. That's why the assets like weirdly grew this insane amount. That's from the Alani acquisition. It was genius for them. I love that brand. They made 100 mil of net income this quarter. Also, another cool thing is Pepsi just took a 5% stake in this company, or maybe it was more, but Pepsi took a 5% stake. In exchange for that stake, they sold Celsius Rockstar Energy. I don't know what to call it. It's like, has anyone heard of Rockstar? It's like a monster competitor. So they sold Celsius Rockstar as well. Anyway, I do like Celsius. It's tough buying here though after that huge rally, but they deserve that rally. They're doing great, dude. They're doing great. How about Open Door stocks? So this company, if you're wondering what they do, they just flip houses. And they really want a low interest rate environment. So check this out. Whenever we had a low interest rate environment in 2022, check out how they were printing money. 4 or 5 billion of revenue a quarter. Well, now, as rates got higher, these year-over-year collapses were real. So sales fell 70, and they've just been flat since. So when we get into a lower interest rate environment, that'll be a huge tailwind for this company's business. They also just fired a bunch of staff. I heard that news a while ago to help out their bottom line, and it really is helping. They're narrowing their losses, which is great news. So that being said, I think there's so much momentum. I think it's already being priced into the stock. What will happen in low interest rate environment? I think it's not worth chasing at $5 or anywhere close to 5, maybe 4, or less. But I don't love that one. They just flip houses, and they're not great at flipping houses. All of my coworkers are drinking protein shakes. It's bigger than ever before. Yo, have they ever had a Alani protein shake? What kind of what's the Premier Protein is public? Hold on. BBEL. Oh man, I had it actually. It's called like Barbell Foods. Hold on, maybe I can find that one. Man, probably not. I'll look for 5 more seconds, then we'll get to the next stock here. BRBL, BellRing Brands. Okay, I found it. No way we actually found it on the watch list. Okay, yo, Cherokee. Thanks so much for the roses there, dude. I really, really appreciate that. Any idea on Hood stock? Does it have a future? I love Hood stock. Too overvalued here, though. I do own them. So here's BellRing Brands. This is a protein company. They own, maybe it's not that. They own Premier Protein and Dymatize. Anyway, this company owns Premier Protein. I think they're really popular. So yeah, shakes are 80% of the revenue. Powders are 16%. The powders business is growing decently. Shakes are also growing pretty decently. Are they net income positive? The margins just collapsed. Was that a one-time adjustment? It wasn't. Usually this company's making like 70, 80 mil a quarter. I still wouldn't buy that stock. Okay, Okay. Do PPTA. What's this one? Then we can look at, oh yeah, Innodata. I do own Innodata. And Adidas, I think they're a European stock or they're on a different exchange, but we can still view Adidas. So this is a $2 billion company, Perpetua Resources. Where does the revenue? So they actually don't have revenue. So when we go to the revenue, I hear it says zero, because they've never sold anything. They've never sold a product or service. They're losing a little bit of net income, but it's not the end of the world. They have a monster balance sheet. How much cash? So they have 430 million of cash and no debt. Yeah, so they just diluted the shareholder by $400 million. I don't blame them for issuing shares while the stock's at all-time highs. The stock didn't care. It's now at an all-time high. So looks like 20, 30, basically 30% of that company's market cap is their cash on hand. But they have no sales yet, so I'd be careful. Revenue-less company. Maybe they're expected to finally sell something soon. Yo, what up, Jace? You said on Monday you'd wait for CoreWeave to drop to 5. It did the next day. Dang. Yo, we'll look at CoreWeave too. Adidas. Oh, yeah, so here's Adidas stock, ADDYY ticker symbol. They have a chart like Nike. Adidas isn't doing too good. The Kanye situation was funny. Kanye, it was like back here. Kanye did some controversial, and then Adidas said, we're dropping Kanye as a partner. We're done with him. And then they silently brought him back, like without announcing it. So they're still selling Yeezys and stuff. So yeah, we can convert the revenue to USD. They are European. Let's see. Revenue's up 12% year over year. Nice growth. And they're making nice net income. This is actually more net income basically than Nike is in the trailing 12 months, I believe. Nice, consistent, couple $100 million in net income every quarter. So actually, from a financial point of view, Adidas isn't doing too bad. You get a 1% dividend. I still don't think this is going to really outperform like the market in the long run. These commodity apparel brands, they're so prone to like consumer trends and all this stuff, but they're not doing too bad financially. So let's look at Innodata. I do own this one. Why is it down? Yo, they have been down for a bit. Yo, I think it's just the whole market today. And here, I'll show you my ownership in this stock right here. So yeah, look at my Roth IRA. Dang, yo, drop a like on the stream. We're falling like a rock right here. But one stock I do own is Innodata, and we're up still. We're up 9%. Dang. They have not been doing too well. But here's why I really like Innodata. Again, remember this market cap. They're only worth $1.16 billion, and they're trading at 28 times net income. That's now a cheap net income multiple. They're only trading at 28 times PE, and you're buying a business that's super growthy. And this is organic growth. They didn't acquire a company to get this growth. The business grew 100% after going 92 to a new record. So the sales are going like crazy, and their agility revenue is too. The analysts are expecting the growth to continue to 71 million. That's a ridiculous record quarter it'll be. I'm watching the next 2 quarters, and they're net income positive. That's the other great thing. They're making net income every quarter. They're making free cash flow every quarter. So for those reasons, I really like Innodata. And as much as I love them, again, I wouldn't have this as a meaningful size position. Like there's a lot of companies like that, like SoFi, Robinhood, DCTH, CRMD. I love them, but you don't want to make them more than like 2-3% of your portfolio at max, just because they're so small market cap. You really just let them grow into meaningful size positions. You let them be 2% of your portfolio, then they 3x to a 6% of your portfolio. Like you let them do that. You don't trim out of them. Oh, so yeah, let's look at CoreWeave stock. So CoreWeave, where is that? That's in the NVIDIA portfolio. NVIDIA has been buying the dip on CoreWeave like crazy. So the thing with CoreWeave is, what's the market cap? $43 billion market cap. That might still be a bit too expensive, but the growth is expected to just continue growing like crazy. In 2 quarters, it's expected to be 1.8 billion. Check out the growth right now. It's already up 3x year over year. It went from 400 mil to 1.2 billion. Bad news is they're losing quite a bit of money, a couple $100 million in net income a quarter. So we do kind of want to see that start to rebound. Sorry, I got to get my water here. So yeah, CoreWeave, I think I still wouldn't buy yet. I'd wait a little bit lower. CoreWeave announces acquisition of Core Scientific. So yeah, Core Scientific is like a Bitcoin mining company. So I guess you're getting some exposure to Bitcoin. Ooh, let's see. Um, Duolingo, Microsoft, Lucid. Yo, Lucid, don't buy that one. Not financial advice. Instead of Lucid, buy Duolingo. This one's also been struggling. If you're like, some people like to only buy stocks that are like at a new 52-week low or like look cheap. And normally you shouldn't do that because statistically, whenever a stock hits a new 52-week low or an all-time low, it's followed by a cluster of new all-time lows. That also works the same in the opposite direction. Whenever you see a stock at a new all-time high, new 52-week high, statistically, it's followed by a cluster of new all-time highs. That's the one thing investors don't really get. But in this case, I think Duolingo is worth nibbling on right now, even though they're probably going to go a little lower. I think Duolingo is worth buying as a quarter-size position right now, not financial advice. They're extremely growthy on their subscription business. I mean, when we judge them from a financial point of view, this company looks great. This is their subscription business. This is that language learning app, if you've heard of Duolingo before. And check out how their subscription revenue just grows 50% every year. These year-over-year growth rates in the middle are just ridiculous. So the subscription revenue is growing like crazy. And if you don't pay for their subscription, you see ads on their app. And their advertising revenue is up by 55% year over year. So both main segments of business are growing like crazy. And not just, revenue's growing. Revenue's up 41, but also their profits and their margins. The net income is up by 83 versus the sales only up by 41. So that means they're growing their net margins. The FCF, which stands for free cash flow, is up 60% year over year. They have a fortress balance sheet. They just paid off all their debt. If you're wondering why did the assets just go down, the assets went down with their liabilities. So you focus on this ratio. It deleveraged by half. I mean, this is great news on Duolingo. There is some fears recently, though, of their thesis being hurt, where like ChatGPT is going to make look at this top news right here. Google enters language learning market. China implements mandatory AI label. Or anyway, Google, ChatGPT are making some like competitors, but Duolingo for right now, their numbers are great. They're great. I'm not totally sure, but I believe many Duolingo users stopped using their prescription. They went all in on AI. Oh, hey, that's interesting. So, hey, that's a great point. Some people might like, hey, why am I paying for a Duolingo subscription when I could have AI help me learn it for free? So, speaking of AI, someone said, can we look at Microsoft stock? Let's do Microsoft, which owns 51 or maybe it's 49% of OpenAI, which is, I think, the parent company for ChatGPT. So Microsoft is just a behemoth. They're safer. According to S&P Global and Moody's, this is a safer investment than buying the U.S. government's treasury bonds. So here's the crazy part. They have their productivity in business. Think Office 365, OneDrive, all that. It's over 120 billion of annual revenue for them. But check out the intelligent cloud business. This business is booming. Also hits a new record every year, every quarter. It's up 25% from the previous year to a new record. So these year-over-year growth rates on the intelligent cloud business are growing like crazy. And they just print money. They're making over 100 billion of after-tax net income a year. So Microsoft is just a great never sell stock. You just buy them, and they're like the AI toolkit for the future. You get a 0.6% dividend. Who doesn't use Microsoft in one way or another via Windows, Office products, ChatGPT? Actually, Google does all that for free. Okay, Joseph, I unfortunately cannot check out DKNG I could, but DKNG I can't cover because of the industry. Yeah, Google, man. Google is another huge cloud play. Google's at an all-time high today after the Apple deal. Congrats if you own Google. I'm up 42% on them, and I'm not selling. Hey, if y'all want to support me, check out my most recent TikTok video. It was about Google. I made it literally the second I uploaded the TikTok video, I started streaming. So it probably doesn't have much views. But if you want to help me out, go leave a comment on it. Oh, man. Please tell me PPTA worth buying. What's PPTA? And then we can look at IONQ. That's a company owned. Oh, wait. We just looked at this stock right here. Yeah, that's that revenue. They have like 500 million of cash on hand, but they're still revenueless. So you still got to be careful with that one just because they have no sales at all. But Like legit 25% of their market cap is just their cash on hand. So here's IONQ. This is a quantum play. I technically have exposure to this stock because Amazon owns 40 million. Amazon bought 40 million of this company, and I own Amazon stock. So but I probably wouldn't buy this company individually. I'm seeing if there's any news here of like actual. No, they haven't. I c- I just can't pay $12 billion for this stock right here. It's a pure momentum play right now. It's a huge momentum stock, but I just don't think it's worth $12 billion. The revenue's 20 million. It did grow 80% year over year, but it's only $20 million, and they lost 177 mil, 200 mil. Good balance sheet though because they were able to raise a bunch of cash. But for IONQ, um, I just can't. I would stay away from that one just because I don't think I could pay the $12 billion market cap. Hey, see you later, lol. Thanks for joining. Um, Nikki, what do you think of Hims? Oh yeah, Hims. I saw that one a few times. Let's go to Hims. Oh, we can look at FLO stock as well. Yeah, hey, sorry, Joseph. The last time I covered a stock in that industry, TikTok took down my live stream, so I just avoid it. I'm sorry. But by the way, if y'all want to support me though, YouTube never gives me any issues. Best way to support me is just watch the stream from YouTube. My YouTube channel is called Nathan Robert. I'm also streaming on there as well. If you miss anything, you can replay it. The stream's there forever. The very beginning of the streams are really fun. I do a whole portfolio update on kind of some news on the market. Yeah, if you want to see like my whole entire portfolio, how it's doing, every stock on the day, I showed that all at the very beginning. So here's Hims and hers. This is that healthcare company, and one reason the stock has been struggling is because they're no longer able to sell a GLP-1 weight loss prescription. A lot of their growth has been because they were able to sell a weight loss prescription, but now they no longer sell one. And here's a new news. Oh, it's gone now, but they recently partnered with another new company to try and again sell a weight loss prescription. They've been through like 3 different people because they got the FDA revoked their original one the first time, so they didn't have FDA approval. Then they went to Novo Nordisk to sell Ozempic. Then Novo Nordisk ended the partnership with Hims, and they can no longer sell Ozempic. And now they're partnering with the new company to sell some other new weight loss prescription. So anyway, to bring the growth back, that's still not their whole business, but it's led to a ton of their growth. And check out the sales year over year. It's up 72%. Like this isn't a meme company anymore. They're really growing the business. So the sales are up 72 after growing 51, after growing 56. Like the growth has just been incredible these past couple years, and not just, revenue, but actual profits and net income. Like 40 mil this quarter, 50 mil. They're pretty much going to be making 200 mil of after-tax net income a quarter. And also they've their balance sheet, like look at their cash. Their cash went from 300 mil to 1.1 bill. Their assets just went up with their liabilities. They rose some debt to raise cash. They might be doing some sort of M&A deal. I don't know, but they need cash for something. Maybe they're going for some opportunity. It's probably going up because Google's ruling was good, and they have an FTC case. Oh, Chris, that's interesting. Yeah, they were up a weird amount, like 8%, right? Despite roadblocks, thanks for the. Oh yeah, hey, what up, Delu? How's it going? Okay. Oh, remind me to look at Progressive Corp. I love that company, and I do own them. I think they're a great insurance stock. But I want to go over Palantir because I saw that one as well. Palantir, I'll be really quick about this one. It's overvalued. Oh, the market closes in 5 minutes. Maybe we'll wait till Salesforce earnings. Maybe we'll cover Salesforce earnings. But the thing with Palantir is they trade at a ridiculous valuation. They traded 106 times revenue. So not 106 times net income, but just total revenue. But here's why they might deserve a high premium, because they're super growthy. Half the revenue comes from the government. This government revenue, a lot of it comes from police stations, and this business is up 49% year over year. That's the highest growth rate I see on the screen. So the sales are up by 49%, and the commercial revenue, which is with S&P 500 companies, a lot of S&P 500 companies use their software, is up 46%. And not just that, but actual profits. 300 mil of net income this quarter. They have a fortress balance sheet. They legit have no debt at all. $6 billion of cash, up from $4 billion. No debt whatsoever. Super growthy, first ever $1 billion revenue quarter, 300 mil of net income. That means they have a 33% net margin. Margins are expanding. Everything about the company is growing like crazy. I love them. I would love to own them, but at a lower valuation. I think maybe 10, 15, 20% lower would be ideal for me to put a meaningful amount. Maybe I'll nibble at a 5% dip, but for me to get a meaningful amount, I want to See them a bit lower at that multiple, but the growth justifies their high price. Oh, hey, Daniel. Yeah, by the way, I'm on a brokerage right here where you buy stocks. If you want to get it, it's in the link tree in my bio. Very first link there. It's my favorite one for analysis tools. One new feature they just added, you can track all the super investors' portfolio and, you can see their exact holdings. These are super investors. They have to make all their trades public by SEC law. And you can now added the batch trade where you can follow them in and set your weightings if you want to. I don't do that, but it's cool to see what they're up to. We saw Buffett just buy a bunch of, what was it called? UNH stock. Hey, and you can follow me if you're on the app too if you want. Okay. Okay. Oh yeah, Progressive Corp. What are you buying next? Here's a stock that I would be happily buying right now. Oh, hey, Plasma. We got to look at AMAT, Taiwan Semi. I forgot to look at those. My fault. And then we'll look at Salesforce earnings. So Progressive Corp is an insurance company that I do own, by the way. Let me pull up my position in them. I like being transparent. We're down on them, so check that out. We have 3.8 shares, basically $1,000. I don't mind buying fractional shares. I got 3.8 shares of Progressive Corp. The market's at all-time highs, but this one is a good bit off all-time highs. And here's why I bought some shares in them. And then you can get in at a lower cost basis than me. They're trading at 13.9 times net income. The industry average for insurance is a 13. I believe they deserve this premium and actually deserve a higher premium than a 13x. So again, insurance company, you've probably heard of Flo, the mascot, but the sales growth, I love this. It just hits a new record every year. If you look at it on a quarterly basis, it's up 23% year over year after going 23, after growing 42. So the growth of these insurance businesses are crazy, and not just, revenue growth, because revenue's up 21, but net income is up 117. That means they're growing their margins, new record margin, 15% net margin on this company. They also do special dividends, and I have a feeling the next special dividend is going to be huge. So normally, look at this, they pay you 10 cents a quarter. Well, every January, they reward the shareholder with a special dividend, a huge special dividend. It was, they only pay 10 cents. They did $4.50. The previous year, it was 75 cents. So I think this time next year is going to be something huge. So they're a nice dividend growth stock, insurance to exposure, exposure to insurance. What do you buy next? So yeah, pretty much Progressive I'm looking into. It's tough to buy a lot of names right here. Like a lot of stocks I own, I wouldn't buy at their current valuations. So let's look at Applied Materials. This one's actually trading at a fair valuation as well. One of the cheaper chip plays out there, or semi plays. Yeah, look at that. They gapped down on earnings, and they've been struggling ever since. Let's see what the actual earnings were, because they beat on revenue, they missed on net income, and beat on EBIT. So maybe it was that miss on net income. I don't know. Semiconductor systems are 75% of the revenue, but they still make a boatload of money. What are the total sales up? So yeah, the total sales are up by 7. Single digit growth, not too bad. But they're making 1 to 2 billion of net income every quarter. So yeah, they have a little multiple. Yeah, they're trading at 18 times net income. Or the PE ratio is just the net income multiple plus any buybacks or dilution. So it's really what you want to look at. And you get a 1% plus dividend yield, 16% payout ratio. I think it's like a value play. Nice. Hey, Steve, I appreciate you, man. Thanks. Oh, weak guidance. Okay, that's what it was. Weak guidance. So do a review on the Robinhood IPOs. I don't think I can view those, Ruben. I don't know how to check those, unfortunately. Or what if I type in IPOs here? Sometimes Robinhood IPO access. So, okay, here's some of the companies IPOing recently. Klarna, which is like a buy now, pay later. If anyone's heard of Klarna before, what are they going to IPO at? What's the market cap? Oh, it doesn't show it on here, but it does on Moomoo. Okay, and then there's Gemini. Oh, well, those are the IPOs. And the market closes in 2 minutes. We'll see how the market closes. We're up 1% on the day. We can literally just thank Google McDougal. They're up 9%. Just a crazy day for, a huge market cap like that. The SPY look at that end of the day rally there. That's a nice little surprise. We were just looking at the SPY at the new intraday low, and now that's a nice little rally toward the end of the day there. So, hey, go check your portfolio. You got to be doing good. So And then we can look at Salesforce earnings whenever they report. What else? I'll be super quick about this, then we'll get back to the stock analysis. Let me see what reports earnings today, just because we never normally stream at 4 o'clock. So yeah, Salesforce reports. Dollar Tree already reported. Dollar Tree's down 9% today. Zoinks. Campbell Soup, they reported. They're up 7%. Where's the after? Okay, GitLab. Forget what GitLab does. Someone on the stream always asks about GitLab. Yeah, that's pretty much it. C3 AI, Sprinkler. What is this company? Do they sell sprinklers? I might add them to the watch list. Nope, Enterprise Cloud Software. Sometimes those boring companies, like a bug spray company, like, what are they called? What's that bug spray company that just prints money? Or it's like a bug spray and termite solution company. Rollins, Rollins, dude. Rollins, this stock, I would put this one on your watch list if you want. I'm waiting for a dip. I'm putting this one on my Roth IRA and I'm never selling it. I don't know how, but they sell bug spray and termite repellent and they just print money. Huge market share. Okay, let's get back here though. So I'm in on GitLab. Hope it jumps. Yeah, hey, Plasma, in basically 10 minutes, you're either going to make or lose a bunch on GitLab. Good luck with that. And hey, what up, Ed Music? So Legend, hey, Rocket Lab and Honest. Yo, let's look at Honest Company and then we'll look at Rocket Lab. Remind me to look at Rocket Lab. I do want to look at them. And what up, Luffy? I sold puts on AMAT today. Hey, nice. So I just sold puts on CRM. Hey, you make that nice little dividend income there, or that premium. So here's the Honest Company. I think the reason the stock fell on earnings right here, they gapped down on earnings, is because investors were a little disappointed in the growth of the company. And here's what I mean. The total sales, the lifeblood of the company on Honest was only up by 0.4% year over year. So I think investors wanted a bit more than just 0.4% growth. They also just sell a commodity. Diapers and wipes are 70% of the business. But good news is that they are net income positive now. They made $4 million this quarter, $3 million last quarter. What's the market cap again on this company? Okay, so yeah, the whole company is worth $440 million. Hopefully, they're going to be making a couple million every quarter from now. But I think investors aren't too happy with the legit less than 1% growth of the sales. Doesn't even beat inflation. But yeah, do you like trend projection feature? I do, Dylan, but I don't often find myself using it too much. What he's talking about here is if you go right here, like this stock right here, if you just want to see what they project the trend to be based off other stocks doing this exact same formula, up here it kind of tells you based off, this has an 89% similarity, this chart. Anyway, it just kind of shows these things. Yeah, Salesforce earnings in a couple minutes. You know what? I'll have it over here just so we can switch over to the tab. Sorry, it'll lag for a sec as I switch here. There we go. So yeah, wait, maybe Salesforce is already out. So Salesforce is dumping 4% right now. Maybe the numbers are out. Maybe I can check the intelligent comments here. Whoopsie. Look at all these comments just in this exact second. Look how many people are on Salesforce earnings. These are all the last second. Yikes. Okay. We'll come back to them in a second here, but not great. Down 4% right now. What app is this? Yeah, hey, I think you're talking about this one. This is my favorite app right here. It's in the link tree in my bio, the very first link there. All the apps I'm using are in the link tree in my bio. They are affiliate links, full disclosure. But what is someone said FLO stock, Flower Foods. So let's do it, Ruben. Unfortunately, Flower Foods is at an all-time low today. Let's see if there's any value in this stock and see if it's worth buying at all-time lows. Can we look at STZ? Yeah, Carlos, what's up? We can look at STZ as well. So the sales are barely up. The sales are up by 1.5% year over year. So not great growth, 1% growth, and the net income fell by 12. So that means they're losing their margins. Margin fell by 15% year over year. Luckily, they're still making 50 mil plus a net income a quarter. That's the good news. I think it's just the margins they're not growing the sales really, and the margins are falling. They might be oversold though. They look a bit oversold, but I could see why they're not doing too well. There could also be some underlying problems that I don't know about. Here's another company that's kind of been struggling, another food kind of stock right here. This is a drink company. Wow. Constellation Brands is down 3% on the day. One stock, when I bought this company over, Salesforce only down 2% now. when I was looking at that company, I analyzed STZ, and at the same time, I also analyzed TAP. And I found that this company, not financial advice, is superior on like every single metric. They're in the same industry. So if you're looking for another one, this has a 3.7% dividend, trading at 9 times forward net income. You get a 3% yield, 3% share buybacks. TAP, in my opinion, I'm actually about to buy more of TAP, is the better buy than Constellation Brands. Warren Buffett did just buy the dip on this company. One reason, look at what they sell. I can't say that word, but if you look really quick, that's what they sell in the middle of the screen there. But the business isn't growing. The revenue is down by 5.5 and the net income is down by 41. So that the net income's really choppy. Like, look how consistent it used to be, like a couple $100 million a quarter. Now there's just like shenanigans, like just like problems. So I like TAP as a better play. One person who did just buy a lot of STZ stock though is Buffett. As we know, they're super investors. We can see their exact stocks that they're buying, and we can see his increased position. He bought another 1.4 million shares of STZ, Constellation Brands. What percent of his portfolio is that? STZ is 0.66% of his portfolio. So anyway, he has Amazon. Wow. So Amazon is 0.7. He has SiriusXM, Visa, Kroger, some Chinese companies too. So that's Buffett's portfolio. Let's see. Ooh, AG&C. Ooh, don't buy that one, my friend. That looks like a dividend trap. Oh, GTLB up 15%. Yo, let's go, Plasma. Actually, let's cover GitLab after I cover UiPath real quick. Someone said UiPath stock. That's actually my biggest loser. Check this out. I actually have another big loser, but I sold it off like a year or two ago. It was ChargePoint. That's why actually here, if we go to the all-time in here, full disclosure, I love being fully transparent. If you got any questions for me, let me know. In the top left, we're only up 15% all time. The S&P's up like 15% in 1 year. So we've underperformed, but UiPath is a company that's too cheap for me to sell at this point. I'm just not selling it, but I'm certainly not buying more shares. So if you look in the top right, they're a $5.8 billion company. So kind of remember that. The whole company's worth $5.8 billion and they're debt-free. So they have no debt and $1.6 billion of cash. So they're debt-free, $1.6 billion of cash. So 25% of the market cap is just cash. And they're not really making consistent net income, but the trend's getting better. Sales are going single digits. Sales are up 6% year over year. That's not good. But I just can't sell this one just for those reasons. I'm definitely not buying. I would not recommend buying this one either. Just don't even put it in your portfolio. Yeah. Okay. No problem. Carlos, did you go over Figma? I have not looked at Figma. What's the ticker symbol for that one? What are some other random stocks like Rollins I might not know about? Maybe like this is another one I own, CALM. This is Calming. They have a 20% chicken egg market share. They're down 5% of the day. They legit sell chicken eggs and they're printing money. I kid you not. Like, actually, look at this specifically. Conventional shell egg sales. That's a what's that called? Like a tongue twister. Shell egg sales. Please load here, Calmain. Sorry, my Wi-Fi is a little slow right now. So I want to see it on a quarterly basis. So check this out. This business is up 92% year over year. So the egg shell business is growing. Specialty shell egg sales also at a new record, incredible growth. But it's not just, the sales. It's actually the net income. They're legit making a couple $100 million on net income every quarter. They just sell a commodity, but they're trading at 4 times net income. And you get a 6% dividend yield. Their dividend changes every quarter, but that's a chicken egg stock. Figma down 9% after hours. No way. Yikes. Yeah, they're down. Actually, let me pull up the one-day chart here. Yeah, Figma's down 7.3. Let me go look at, what was that other stock? GitLab, GTLB, GitLab. So, GitLab, yikes. GitLab is down 10% right now. So I think initially they were up a bunch, but now GitLab is down 10%. I guess we'll come back and see what happened there. Yikes. Let me look at Salesforce now, CRM. Salesforce is down 5. Dang. Salesforce down. They're right at my line. They're literally at my Fibonacci line right there. Okay, yikes. Why is Nvidia down? Is Nvidia down right now? Let me see that. Nvidia had a nice end of the day rally. Look at that. Yeah, the whole market did kind of at the end of the day there. Yeah, we're up 1% on the day. Yeah, market just closed. Yo, Nathan, any idea why GitLab would drop 25? There must have been some news that dropped there. Hey, what up, Safe? Yo, hey, sorry if I'm yapping. Yo, I'll try to MPPC. MPPC containers. I can't find that stock. I did look it up. So someone said, what's wrong with AG&C? So I'll just show you the numbers for yourself. You can draw your own conclusion here. But they just don't outperform the market in the long run. So this company you buy to maximize your dividend income. You get a 15% dividend yield. Oh yeah, Rocket Lab. We got to look at them. But they're down well over 50%, from their 2019 price. So they're down 15%. And look at this dividend yield, a 15% dividend. They're a mortgage REIT, but it's just tough, especially with these choppy numbers. Like they lost net income this quarter. What are the sales growing? Let's hope so. Let's see. So I don't even know how this is possible, but the actual revenue, not like net income, but the sales were negative. The mortgage REITs are weird with how they report numbers, but I would just be careful with that company. Actually, I own a different one. I actually own MAIN. I own Main Street Capital. This is another monthly paying dividend stock. And, we saw that one was down 50% from 2019. Well, this one is up 115% from 2019. And even now, it still has a 5% dividend yield. Actually, we could do that. Actually, you know what? I'll do you one more favor here. For AG&C, let's go see how much the dividend costs. Let's just go look at the actual dividend quarterly number. You find that in the cash flow statement. So the dividend cost oh no, the cost of the dividend is going up because they're diluting you. So I just looked at their dividend. They're not raising their dividend. They're not raising the dividend for you. So how is the cost of the dividend going up? Because there's more shares that exist, and for each share that exists, they have to pay dividends. So that's how the cost of the dividend went from $2.93 to $3.94. So they have to at the very least, make $394 million of revenue to pay the dividend. They couldn't afford that from the cash flow or the net income. And let's go. When I click the CFF number, expect this to be super positive, and hopefully it's not. They diluted you by $3 billion. Okay. I don't know about that one. Can you tell us what you're using? I'm on an Apple. I'm Apple TV. I'm just screen playing right now. But yeah, I'm screen playing to my computer. So I'm Apple TVing to my computer. Listen to you and sold my AG&C and bought Main instead. Yo, hey Mikey, nice. Yeah, I think Main Street Capital is definitely a safer monthly payer. It's 5% yield versus 15%. It's not as high as a yield, but it makes up for it with the stock price appreciation. And it just is, I think, a better overall run company. Main Street Capital, they have a lower 5% dividend, but they sometimes pay you special dividends twice in 1 month. I made YouTube videos about this as well, where in between their normal 25 cents, they pay you 25 cents a month. But check this out. Why'd they pay you 30 cents? Because they made so much extra that month, they decided to reward you. And they also did it at the same time last quarter, another 30-cent dividend. Here's how we can also tell that this company can afford their dividend. Remember, if we go to the yield here, they have a 6.4% yield. And the payout ratio says 70. Again, these BDCs have to pay out 90% of their taxable income in the form of a dividend to avoid paying taxes on it. All right. And this company is easily making, as you can see, over $100 million of net income a quarter. So they're making over $100 million of after-tax net income a quarter, and the dividend only cost $84 million. So here's a company, another monthly payer. What was the yield? Was it 6%? A 6% yield, and they can afford the dividend and even afford to raise it. That's how they can afford to do these special dividends. They're sustainable. So not financial advice. Hopefully I can change how you look at, stocks. Go and actually see how much are they making versus how much does the dividend cost. Does it look sustainable? Does it look consistent? GitLab is cooked. I have no clue. They beat on everything. Maybe it was guidance. Oh, actually, GitLab's only down 6%. GitLab was just down 10%, so they are recovering a bit. Sometimes they'll go really green the next day. Check MPCC. Sorry, man. I try to get to all the stocks here, so I can't even find that company. I don't think you're talking about MPC futures current contract. Are you talking about this right here? I I, there's nothing I can look at here. Unfortunately I can't view whatever you're talking about. I don't even know what this is. Unfortunately, that's not on this exchange. Is that even an American company? Sorry, man. I don't think I can view that. It's not on this exchange. What do you think about Apple short term and long term? Apple September event. So yeah, Apple just released a lot of cool new like basically leaked a bunch of their future plans. Like they're getting into the smart home system, kind of like Google Home. They're getting into like security cameras, like a bunch of cool stuff. It'd be interesting to see how Apple pulls it off. But main reason Apple's up today, up 4%, is because Google is allowed to continue paying Apple $20 billion a year to be the default search browser. Isn't that nuts? Did you know that, by the way? It brings a ton of money to Apple's bottom line. Google pays Apple $20 billion a year to be the default search browser. So that's a huge revenue stream, and Apple gets to keep that now. And check this out. And that's also why the government's not too happy. And actually that ends at the end of the year or in a couple years or something. I don't know. But check out this smartphone market share for Apple. Huge, a 19% smartphone market share. Obviously, iPhones are most of the revenue, or 47%. But the most valuable part of Apple is the services business. If you go spend $100 in the App Store, you go spend $100 on Clash of Clans, $30 of that money goes back to Apple as legit like a royalty. And this business is now going to be over $100 billion of annual revenue for them, and it's super high margin for them. They don't do any work to get that money. Basically a royalty. So the services business brings the most to their bottom line, more than the iPhone, just because of the margins of it. But yeah, then they're in Macs. They're also in wearables like AirPods and the watches. And here's also why Apple is affected by tariffs. Only 36% of the revenue comes from the US, then 25% Europe, 17% China. So I always thought Apple, more of the revenue came from the US. Also, Apple is a huge, tremendous buyback play. So they made $23 billion of net income this quarter. That's about what they make every quarter. What is Apple doing with all this net income? Since Apple's too big to acquire a company, regulators won't allow Apple to go buy a company. They just spend all their excess money on share buybacks. They legit spend over $100 billion a year buying back their own stock. Can you believe that? Unless you know about it, like Apple legit spends $100 billion of their after-tax money every year solely buying back their own stock. And here's what that does for you as a shareholder. So the net income grew by 9%, but the net income per share grew by over 12%. Dude, that's why stocks are like, it's like Tina. There is no alternative, dude. Assets where the company can buy back their own shares, and that's tax-free for you. They pay qualified dividends, which for me, long-term capital gains, 0% tax on dividends, even in my taxable account. Like, I love stocks. It's a Norwegian shipping company. Oh, okay. That might be why I can't find it. Oh, yeah, Salesforce. So, yeah, Salesforce just reported earnings. They're not down too bad. I mean, 4%. That puts them to where they basically were last week. It's really not the end of the world for Salesforce, but I am curious to see what their earnings were. Maybe I can see some of these intelligent comments here. Salesforce beat estimates by 15%, but still down. And maybe I'll look at them. Maybe I'll buy Salesforce. Maybe they get bad guidance or something. Who knows? Guidance, this is what been hurting a lot of stocks lately. Good ASML. Marvel Technology, and some other names. It's really the guidance that's been hurting them. How are you streaming screen for? Yeah, hey, I'm Apple casting or Apple TV. I think it like shows the logo at the top there. Yeah, there we go. So yeah, I'm just Apple casting to my computer, and then I'm streaming from my computer. So, oh yeah, and we could look at Marvel too. I didn't even realize GitLab had a little rally before this. Still up on my original position. Hey, that's what's up. And what up, politics? So Nebius. Actually, I want to look at Nebius first. remind me to look at Marvel. So that's a stock actually owned by NVIDIA. So if we go to the NVIDIA portfolio right here, one of the stocks they own is actually Nebius. And again, just because NVIDIA owns a stock doesn't mean you should automatically. You always want to go do your own research. And when we go do our own research on Nebius, I love what I see. You know, the growth is fantastic. The sales were 15 million the same time last year. Now it's $100 million quarter. And get this, you know, 100 million this quarter. The analysts are expecting it to continue. In 2 quarters, they expect it to be at 262 million. So the growth on Nebius is just ridiculous. They are still losing net income right now. You know, yikes, like 100 mil a quarter. But the growth is great. And NVIDIA does own them, so they get some of the ecosystem benefits, kind of like CoreWeave and APLD do. GitLab earnings analysis. Unfortunately, I'll do this all tomorrow. Yo, come to the stream tomorrow. It should be fun. We're going to do a full analysis on GitLab earnings, Salesforce, any stocks that reported earnings. Actually, I wanted to hold on. The screen's going to look weird for a second. Just wait just 1 second. Yeah, C3 AI is down. Okay, that's crazy. Okay, so C3 AI is down a bunch as well. Let me pull up that one. We'll look at all these tomorrow because the earnings just came out and they're not on this app yet, but they will be tomorrow. So yeah, C3 AI is down 15%. They got the good ticker symbol AI. Not a stock I'd want to own. Are you in uranium or nuclear power stocks? Yeah, so I do own one nuclear play, and it's the largest, purest nuclear play out there. Ticker symbol CEG. This company legit owns 50% of all the U.S. They own 50% of all the U.S. nuclear reactors, largest pure play for nuclear energy. They legit are reopening 3 Mile Island nuclear reactors solely to power one Microsoft data center. Microsoft's paying a huge premium to them. But yeah, I wouldn't buy this one here. I'd wait for under 300, but I love that one. I put them on the watch list. They're the number 2 utility in the world, or by market cap. So HPE, I think, beats. What up, Michael? Hope you're having a great Wednesday. So HPE, Hewlett Packard. So this is that like PC company, I think. So they're down 1% after hours. Not too shabby. They're trading at 22 times net income. They've really been flat for a while. Like they really haven't done much since 2017, or they're lower than they were in 2017. But yeah, they sell server, hybrid cloud. How's that doing? Hybrid cloud revenue's up 13. Intelligent edge. How's that doing? So we'll deep dive into their earnings tomorrow. All the companies that reported today. $6.52 for bread. A dividend for bread. Hey, yes, sir. Oh, the flow dividend. Nice. C3AI, Asana too. Oh yeah, Asana. I forgot about them. How do you know what price you should buy at? You know, you really don't. You just whatever feels right or whatever feels cheap. Doing your own little financial multiples. What software are you using? Oh yeah, hey Thunder, I'm on a brokerage right here where you buy stocks. It's my favorite one. If you want to get it, I have an affiliate link in the link tree in my bio. Very first link there. If you want to help me out. Or you can just type it into Google. It's just a broker called Moomoo. Yeah, CRDO as well. This is a company I love. Did they go up? No. You know why I'm upset about this stock going up 9%? Is because I wanted to buy this stock. Here's what interests me about certain companies, and this one in particular. Maybe you could put this one on your watch list. But as you know, I love growthy companies, and this one is just so growthy. The sales after growing 90% are up another 180%. And out of this 170 million of revenue, they're net income positive now. 40 mil of net income, 30 mil last quarter, and an absolute fortress of a balance sheet. I mean, this just checks all the boxes. They're super sales growthy. They're net income positive. They're growing their margins faster than the sales. They have no debt whatsoever, tons of cash. Cash is earning interest. That's the recipe for a great growth stock. Yeah, let's see. Oh yeah, Marvel. Let's do this one. MRVL. And my phone's getting low here. Dang. So Marvel Technology, they're one of the cheapest chip plays out here. So Marvel Technologies trades at 22 times forward net income. What are you using to stream? Yo, I'm using the TikTok Studio app to stream. So Marvel Technologies, this company I really like. They had some good earnings. Actually, they didn't have good earnings because I remember they missed by a legit 1% on every metric. So they barely missed on every metric. And I'm not sure what the guidance was. I think the guidance wasn't so great, assuming the stock fell a bunch. But still, next quarter, all eyes are on next quarter because it's going to be a make it or break it quarter. Let's hope they beat this expectation. But $1.50 of EPS, that's going to be an insane over $1 billion of net income quarter for them. If we zoom out, this is why right now is like the most justified time to ever buy Marvel. You couldn't really buy it back here. They were burning through a couple $100 million a quarter, but now we're on a consistent path where they're making $200 million of net income a quarter, and net income that they made this quarter equivalates to 22 cents of EPS, and the EPS next quarter is expected to be $1.50. So it's supposed to be $1 billion net income quarter next quarter. Let's watch it closely, but that's in 3 months from now. I might actually be looking to get them in the Roth IRA, but not as a big position. Oh, yeah. Hey, Delulu, you know what stinks? I tried to get the TikTok Studio on my MacBook, and it's not available for Mac. The TikTok streaming service, you can also use Streamlabs OBS, but the TikTok live streaming service platform, which is like the best one, is only available on Windows. You can't even get it on Mac. So I don't stream on my Mac. I stream on my PC. Yeah, just on my PC right now. Hello. All right. So what do you think of CLS? Tech earnings have been looking bad. Yeah, basically besides mega cap earnings. I want to look at Salesforce later. I want to see, someone said they beat guidance by 15%, but this stock fell nonetheless. Maybe they get bad guidance, but here's CLS. Oh, this is Celestica. I love this stock right here, but unfortunately the valuation's too high. But let me tell you, this company also deserves to be at this new 52-week high level. Check out their connectivity and cloud solutions business. This is an industry you really want to be in, really growthy. Just hits a new record every quarter, besides, of course, that huge one-time adjustment. But same with the advanced technology, that's growing. And it's not just the revenue that's growing. So the revenue is up by 21, but the net income is up by 122. 200 million of after-tax net income. The analyst, that blew away the analyst. The analysts were expecting $1. They reported $1.82. Also, huge beat. The orange line is what the analysts expect. So if you ever see a stock gap up on earnings, just go check what the analysts expected, and it usually explains why they either did really good or really bad. A huge beat on revenue, huge 90% beat on net income, beat on EBIT. So that's why they gapped up. We'll look at a few more stocks. Unfortunately, I got to run here in a couple of minutes, but I've been streaming for over 2 hours now. I do really appreciate y'all. Yeah, by the way, if y'all want to hit the follow button, we go live every day, sometimes twice a day. I sell nothing. I have no course book. I'll never follow you, DM you. I have no WhatsApp, Telegram. So watch out for people impersonating me. I'll never follow you or none of that. Oh, also, let me check out how the market's doing real quick. We are up 1% on the day. We're mainly up thanks to Google McDougal. They were up 9.3% on the great news that they don't have to sell off Google Chrome or Android. Our Roth IRA, on the other hand, was down by 1.67%. So not great. Do you have a schedule? Not exactly. I usually stream around this same time today, but while the market's open, I usually stream during market open hours. But yeah, usually 2 or 3 hours after the market opens. Yeah, 2 hours after the market opens, I usually stream. But yeah, also, by the way, the number one way to support me, if y'all are like, hey, you seem cool, I want to help you out, this would help me out more than donating, is just subscribe to my YouTube channel. My YouTube channel is called Nathan Robert. I'm also streaming on there as well. If you miss anything, you can replay the stream. A lot of people like to watch it when it's over. They leave a stock in the comments, and I'll look at it at the beginning of the next stream. But let's look at Rocket Lab before we go. So yeah, my YouTube channel is called Nathan Robert. It's also in the link tree in my bio. And I'm streaming on there too. So here is Rocket Lab. They're down 11% on the day. Maybe it's this news article up here. Space Dock, Trump moves Space Command, Rocket Lab. I don't know what, maybe I can see the AI news. Rocket Lab and Firefly for Pentagon space defense contracts. That's pretty cool. So one thing I really like about Rocket Lab is how growthy they are. They just completed their Geost acquisition. So if we go to their space systems revenue right here, it's up 27% year over year. This growth is going to be even higher. It's going to be inorganic growth, but still growth nonetheless. And the organic business is still growing, but it's going to be even higher after the acquisition. And also, they have this other launch services business, and this business was up by 59% year over year. So it's good to know both main segments of Rocket Lab are growing very nicely. They also lose net income every quarter, but analysts kind of expect that. They did lose a little bit more net income than investors wanted this quarter. They're losing 50 mil a quarter, but they're super growthy, so it makes it all right for now. But I would watch this net income losses number. They also have a huge backlog, like legit a $1.5 billion backlog. Never heard of Firefly? Yeah, so Firefly is another publicly traded stock. They sell drones. I think I just added them to my watch list not too long ago. Yeah, ticker symbol FLY. So here's Firefly Aerospace. They legit just IPO'd, so looks like they're at an all-time low, but I say all-time low. They've only been public for 5 days, but they hit an I'm on the weekly chart. Okay, so they've actually been public for like a month, but yeah, Firefly Aerospace, they sell drones and stuff like that, I believe. So anyway, that was the stream. If y'all want to support me, make sure, again, follow my you can hit the follow button on TikTok too. Also, subscribe to my YouTube channel. I make YouTube videos on there. The stream's on there as well. If I talk too fast, you can replay it. So yeah, YouTube channel is called Nathan Roberts. Also in the link tree in my bio. And if you wanted to get this software that I'm on, it's my favorite brokerage. It's also in the link tree in my bio. It's the very first link there if you want to get this app I'm on to buy stocks. It's a brokerage. So anyway, have a great rest of your day. Thanks again for everyone who showed up to the YouTube and the TikTok stream. Hope you have a great rest of your Wednesday. See you, Joseph. Oh, I forgot to get to ABT. My bad. You know what? On the next stream, I'll get to that one for sure. So if you want, make sure to hit the like button on the YouTube stream before you go. It really does help me out a lot. Even though it's at the end of the stream, it'll still help me out. And if you want to come back for the next stream, hit the subscribe button. See you later. And turn on notifications if you want to be notified when I stream. So, hey, see you, Politics. See you, Michael. See you, New York. Plasmas. Have a great rest of your day. RIP GitLab. We'll check out earnings tomorrow. We'll look at Salesforce. GitLab will review the earnings, see if it's justified, see if there's a buy the dip opportunity. Marvel looks decent.